Hi, it's Mark Sebastian, founder of OptionPit.com. Today, we're going to talk about gaps, but before we do that, I want to remind you, go to OptionPit.com and check out everything that we have. Read the VIX Edge every day, read the Pit Report, read every single one of these newsletters because they're all going to help you become a better trader and handle this market better. All right, so let's look at IBM. All right, IBM, the November 145 calls went out at $3.25. Let's say that we come in on Monday, we're recording this on a Saturday, 10/9, and let's say Apple is up an even IBM is up an even $5. How much will this call option gain? It's really easy. So the first piece is just the change in move, all right, the move times the delta, all right, which gives us that delta of that option in this case is 0.42, $2.10. So the call option would be worth $5.25, $5.35, excuse me. However, that's not it. Why? Because there's this thing called gamma, and it starts to really matter on big moves. All right, on big moves, it matters. It changes. And the key is we need to find that average delta during the move. So how do we get that? It's really simple math. It is 1/2, let me undo that because that's terrible. It is 1/2 times the change in price, which is 5. All right? 1/2 times change in price. I'm sorry. That is wrong. It is 1/2 your gamma, 1/2 your gamma, the times change in price squared, times 5 squared. Thank you. See, even us great ones, sometimes we have our little brain hiccups, if you will. So in this case, my gamma is 0.03. So it'd be 1/2 0.03, all right, times 25. All right, so that's 0.015 times 25. All right, and you guys know what 1.5% of 25 is, right? 37.5 cents. All right, so on top of the $2.10 that the option will gain, it will also gain an additional 37.5 cents, and that is from the increase in delta. So what they're saying is at the very beginning of this move, this $5 move, the delta is 42. All right? Delta is 42. At the end of the move, if our gamma is 3 and we move 5 points, the delta is 57. All right? So our average delta over that move is 49. All right? 49 times 5, we get our handy dandy calculator out. 0.49 times $5, $2.45. Remember I said 210 plus 0.37, 247. So you can see two different ways of getting to the same answer. So in general, if you want to know what you're going to make on a gap, it is the change in price times the delta plus 1/2 the gamma times that change in price squared. Real quick and easy way to get to how much money I made or how much money I lost. All right. So when you see me on video or on my morning show or talking about eyeballing a option pre-market when I can see the stock has already moved, and I say the option is going to be worth about $5 when we open, or in this case, about $5.60 when we open, I am doing that simple math in my head. And that's something you can do to figure out what the option will be worth. Now, there's one more piece to this puzzle. And this is the part where years of experience comes into play. And that is options have Vega. Now, this case, the IBM option has 19 cents of Vega. If this is, say, a post-earnings move, we can actually look at a volatility chart. I use these all the time. And we can figure out, okay, how much is volatility going to fall? If it's going to fall, let's say, 4 points, well, then the final piece would be plus change in vol times the Vega, which in our terms, we use the letter K for kappa. So it'd be change in vol, you could use the delta there if you want, change in vol times kappa, and that would be the last piece that you have to eyeball. Now that takes a lot more experience, but you should be able to figure out whether vol is going to be up or down and be able to add or subtract a little to your pricing. Now why is this important? Because this will help me unload an option that I'm long when we've made a big gap and I want to take my P&L and I want to take my profits. It'll also help me figure out how much damage has been done on a negative gap when I'm trying to figure out whether to cover a trade or not. This is something pros do to manage themselves, something we use all the time when we are trading pre-market. I can give you a few examples. One example is Ford. When Ford announced they were going to be doing a big investment on electrifying trucks, it got a big pop. We calculated, hey, it's going to be worth about this. I was actually able to put a closing order pre-market in that was accurate because I knew where my call options would be priced at. So that's one of the beautiful things. It'll help you price your options pre-market and post-market. All right, everybody. I hope you have a great day. I'd like you to join us. We're still open on big money flow. Reach out to us, 888-872-3301. Talk to my team for special pricing. Have a great day. I'll talk to you soon. This is Mark Sebastian, your only option. Coughing and out.